see my screen, right?
Yeah.
Yeah. Whenever the person's ready to record, just record it, please. All right, cool. The first thing we do, right now, we're going into a new month. Well, we've already gone into a new month, so it's always starting on the DXY, right? Look at your monthly chart. You see from chapter 6, because there's a lot of you in here that's caught up. We understand that every candle is going to have a level of Judas swing, right? Whenever a candle opens, what you're trying to do is you're trying to trade the expansion of the candle. What is the expansion of the candle? For example, the expansion of this candle it's the body of the candle, right? Where is the meat of that move happening? Is it likely to be favored to the downside, or is it likely to be favored to the upside? That's what we're trying to look for in the week, because if we know where the weekly expansion is going to be, we're going to take day trades in line with that weekly expansion. It's very easy. But then the bulk of your analysis is this: where is that weekly expansion likely to be favored in? Which direction, higher or lower? Now, if you've been keeping up with the weekly commentaries, I tell you guys to consider three things. Where is price? Where did price come from? Where is it likely to go? This down candle is a bullish order block. Now, this candle's wick, it overshot this candle's body entirely. This is redelivered rebalance. So you see from this candle's low to the opening of this body candle, that's a fair value gap as well, right? Forget that wick happened, right? This is a fair value gap from this candle's body to this candle's low. There's a fair value gap, and this candle itself is a bullish order block. Now, this candle, this is the monthly chart, right? This candle, we're quite local to this order block, isn't it? So you see the opening of the next candle. We can open, manipulate lower, and push away higher. Now, let's say going into this month, we see that the candle opens, trades into this order block, and you see that now there was, like, let's say on the economic calendar, there was a news event, right? Let's say it was the NFP or the FOMC. You see that after we trade into it, that news event moves away from it. Where do you think the rest of the month is going to go?
Higher.
Exactly. Simple things like this. Where is price right now? Where is it likely to go? Right? That is how you understand where price is going to go on the higher time frames. Now, why is it the higher time frames you consider? You see, if you go on YouTube, yeah, how many of you guys have seen like those YouTube top-down analysis videos? You know, when you see like they start from the daily to the 4 hour to the 1 hour to the 5 minute to the 1 minute, and they refine like a daily order block into a 1 minute level or something. Yeah,
Yeah.
that's what you don't want to do, right? You have to make the distinction in all your trade plans. You should have, like how you have the currencies you're going to trade, you should have a set of time frames you're delineating towards the direction I'm using to trade to and the time frames I'm using to execute upon. Makes sense, right? So for me, I use mainly the weekly and daily, and the monthly has its place for me. I don't look at the monthly candle all the time, but I give respect to it at the start of the month and the middle of the month. Now, you see the weekly commentary a few weeks ago. We spoke about this being the low of the month, did we not? For the bond market, we said that this is going to be the low. I wanted to see this be when price was here, not when price was up here. When price was here, we said that this is probably the low of the month. Why? Area of imbalance. This is a liquidity void, right? Candle body, just move higher, right? No wick overlapping here to make it a fair value gap. When the candle comes and trades down here and it's the middle of the month and we see a reject off of here now, and given the daily is a market structure shift, you can see where the rest of the monthly directions want to go. Now, the US 10-year, what's the the emphasis on the US 10-year? What does it tell us? What does this tell us? Where's the DXY is going? Does it tell us what market's going?
To go higher, bro.
Exactly. So the bonds and the dollar index, they are in line together. Essentially, this is the interest rate market. This is telling you the value of the US, the DXY. Now, these two, right, they are usually correlated. Now, you see right now, the DXY is lagging behind the US 10-year, and even the US 30 is up. They're both up. So you see how there's a strong correlation for bullishness within the bonds, but the DXY is lagging. What does that show? There's underlying accumulation happening in the dollar, right? Now, we understand where we are on the monthly. We have that order block, right? Just remove this. This is where it starts from. Now we have this level here, and this is our weekly fair value gap. And this has been a drawn liquidity since this candle, since this weekly commentary, right? From this weekly commentary, we had the drawn liquidity to this fair value gap. From this fair value gap, it's about how you're trading within the area. A lot of people, they will just, they go too hard on their bias. And what they do is when it goes down into that area, they try to catch it. It's not good to do that. What you want to do is this, let it trade into that area. See how we trade away from it. See if this is where the weekly low is likely to be. Now, in saying that, we're in this fair value gap. Where do you think, the next candle is likely to go from here? We have equal lows here. You see this candle and this candle, right? Let me just remove this. You see how now we have 1, 2, 3. It's building up that sell side liquidity pool, isn't it? Yeah. Where do you think, given that there's a sell side liquidity pool that's here, given this fair value gap, where do you think the next candle's expansion is likely to be?
Lower.
Lower, because we're very close to this liquidity pool and there's a price array that we could trade into. So you want to see the move lower into there. Now, in saying that we can move lower into there, we can also find a reversal here. Now, remember that, pay attention to what I said, that we can move into there early in the week and then we can reverse. Now, this is where this comes in, right? Monday, from the last weekly commentary, we all said that this is dead, yeah? From the last week, if we go up back up, dead and dead. Have all of you got your white folders enabled on Forex Factory? If not, enable them, because then you wouldn't have known that there's bank holidays there and you would have tried to turn up to a session that's not favorable to trade. Let me see the questions. Now, going here. Where is the folders within the week? Monday, nothing. Tuesday, there's one. Wednesday, we got a few, right?
Yeah.
And we have the end of the week. Well, it's the first week of the month, so you know that the folders are going to be towards the end of the week. Why? Because what's on the first of every single Friday? Or what's on the first Friday of every single month?
NFP.
NFP. So you see how now, you see how the reason to bully price around is left towards the end of the week. So what type of weekly profile? Now, a lot of you might think, what's a weekly profile? Maybe you're not on that part of the mentorship yet. That's fine, right? Because when you come back to this weekly commentary, as you're going in order, you'll see what I'm saying. What do I mean by weekly profile? Any of you?
How the weekly range is built, though.
Yeah, the days that build the week, right? So your daily profile, for example, a bullish weekly profile can be Monday, Tuesday, Judas, and then midweek reversal Wednesday, Thursday, Friday. Do you see my point? That's weekly profiling. Now, looking at where price is, right? Looking where price is and using this as your, your time, your measure of time. This is the level of analysis you guys need to do. What is more favorable to happen? An early reversal, so quickly making that manipulation, or midweek? Midweek, because look at all the price, look at all the reasons to push price, look at all the manipulation reasons that can happen within the middle to the end of the week, Wednesday, Thursday, and I believe, was it Friday as well? Yeah, Friday as well, right? Now, when you do that, then you look at price. So early on the week here, you can have a Judas swing. Now, what's a Judas swing? Every single candle, notice how I'm not saying time frame. Every candle has a level of Judas swing. Now, what's a Judas swing? For example, this week,
False move.
exactly. This week was a down week, right? And we can all see that. This candle was a down candle. You see the move from the open to the high. That's the Judas swing, right? That's the Judas swing that we wait for. Or if the Judas swing is very clear where you can trade to, you can trade the Judas swing from here to here and then sit on your hands. You see, all it is, right, is trading from one area to another area. You see how we have a conviction that we can see this area to get traded to. Do you see my point? You see in here, it's very sideways and it's like, it's a bit odd. Why was it odd here? Because the US 10 years showed its hand and maybe it would have just started to reverse here as well with it. So you see how here the repricing was a bit uncertain. From here, is it uncertain? No,
No.
you have a clear, you can work this, right? You can go in and you can just look for shorts on the dollar until this is hit, right? Even if the candle opens and you move higher, you can still wait for short positions and target this. You see, it's all about having a higher time frame narrative. You guys need to know where is the repricing likely to be on the weekly, and you're trading that expansion on the weekly. I say daily time frame throughout the week is good as well because you see once the date, let's say you're on a Tuesday, right? Let's say you're going through the week. Now I'll show you a clear example from something that we spoke about in the weekly commentary before. You see this here is you all can see the axis here, yeah? You see this is Wednesday. Well, it was Wednesday, right?
I remember this.
Yeah, you see that this was Wednesday.
Yeah.
Now Wednesday, what do we see that Wednesday can do? Midweek reversal, right? Now, given that this candle trades up, right? It sweeps Tuesday's high up into this premium array, right? Volume imbalance coupled with the mitigation block. From this candle, where do you think the next daily candle is going to go?
Lower.
Lower. It's simple. It's so simple. And
Open
sometimes,
high, low, close.
exactly. Now, is it always as simple as this? No, it's not, because here it was not easy to know where that was what was happening. Do you see my point? When you have clear conviction from here, I know where we're repricing to. The next, I'm expecting the candles to go lower, and I'm trying to hit this low because high to low, this was the range, right? And you can take trades in that direction once you have the confirmation where the repricing is likely to go. You see, the biggest skill that a trader can have, yeah? The biggest skill a trader can have is understanding and knowing where the likely repricing is. Now, can you know where the likely repricing is for every single candle? No, you can't. Well, unless you're very, very, like the 0.0001% possibly, right? Like if you're central banker or something. For us, unfortunately, we can't because inside of consolidations like this is tough, right? Inside of consolidations like this as well, it's tough. You need to see one way getting favored. That's very clear. Now, waiting for something like this, people say, "Oh, I might take. I can. Oh, if I miss this trade, then I miss all of it." No, it doesn't because now you have a bias up until this sell side liquidity pools hit. Do you see my point? Now, likewise, if we do a power of three, and for those asking what's a power of three, it's accumulation, manipulation, and then distribution. If we trade down into this area here that we had marked out, right? This one, and we show clear rejection, and that's coupled with, let's say from this weekly, the rejection off the weekly time frame was coupled with a market structure shift, right? So let's say we trade down and then we trade higher above all of these highs. We know that we can target this high, this high. Essentially, we have data ranges to work with, isn't it? Right?
Yeah.
Now, when we do that, let's say if that does happen, look at the clearest targets you have. It's the most obvious market maker buy model. Initial consolidation, the reaccumulations, every single retracement up higher to lower, right? You have a clear bias to work in. You see how you see how in that context it's very easy to work in. But what people get trapped in and what people get stuck in is when it's not clear to trade. For example, I know a lot of you guys struggled in here. I remember the messages I was getting, and I told you guys you're trading inside of a consolidation. I don't think anyone traded this because of the holiday season and the idea that it was the week of Christmas, right? You see how trading inside of an unfavorable condition is gonna lead to unfavorable results. The reason being is this. You see how everything I taught, how many of you guys are on chapter 3?
Yeah.
Yeah. You know the times of days, like the London session, and I showed like, the London session does the Judas, and then you can expect the expansion from London, New York, and London close closing, right?
Yeah.
Those time aspects only make sense when you know where that daily candle's going. I'll give you an example, yeah? And can be applied to all time frames because it's fractal, but let's stick to the higher time frame. You see, like we said here, yeah, the next candle for after this one, which is this one, was likely to go, it was favored lower than higher, right?
Yeah.
Yeah,
Yeah.
cool. Now we know that every single candle is going to have a level of, it's going to open, it's going to manipulate, making the, well, in this context, the down candle's manipulation is making the high, and then it's going to go make the opposite end of the range, right?
Yeah,
Now,
bro.
exactly. Now you see when you know the direction of that candle, especially the daily candle, this is the key. When you know the direction of that next daily candle, you can then apply the times of day which each portion of the power of 3 of the day is likely to unfold. Do you see my point? For example, you knew this was going to be a down day. So what time is likely to make the Judas swing?
London.
Midnight to London, right? So midnight to London, you see that move higher. Now let's say you got that move higher in London and you see a clear market structure shift. You know what you're going to expect, short positions, right? You're then going to look to entertain short positions on the dollar, which translates into what for euro and pound?
Going up.
Longs on euro and pound or foreign currency, essentially, right? You see how you can't sieve out here whether the next candle is likely to trade higher or lower. It's difficult here, isn't it?
You got no edge.
So in here, yeah, you see how this is clear, like that framework is clear. When we trade up into a PD array and away from it, it's clear to know where the repricing is likely to be. We all agree on that, yes or no?
Yeah.
Yeah. Now you see in here when you don't know whether the next candle is going to be up candle or down candle. So do you know where the Judas swing is likely to be, yes or no? Because you don't know whether it's going to be a bullish or bearish candle. You don't know which candle is going to be favored, what type of delivery is going to be favored. Do you see my point? Now, if you can't do that, you're simply gambling, because how are you going to go and know what type of trade, what type of side you're going to entertain? Don't get me wrong. I get it. You can price action trade, and after you run a low, you can find scalps, to buy side and whatnot. I get that. But the thing is, I don't want to put you guys into that yet because it's a lot more intense and it's higher level. And to be honest, it doesn't make that many profitable traders trading that way. You need a clear direction to trade into, and this is what the weekly commentaries do. So if we go to, let's consider the pound as well, yeah? You see the pound, what's this candle called? Did
Doji.
this this is the inside candle. Why? Because we didn't break the previous candle's low, nor did it break the previous candle's high. What does that show?
Consolidate.
Exactly, because the liquidity is untapped. It didn't purge a side. It's accumulating orders, right? Now, when it accumulates orders, you want to stay out. You want to see the manipulation essentially and try and trade the distribution. Now,
Expansion.
now, if you're looking at Euro did break its high and DXY broke that candle's low. Do you see how pound is consolidating?
It's better to trade euro.
Exactly. So yeah. So I always look at, so the next lesson essentially is called a routine, and basically it's going to be this weekly commentary but amplified by 100x. So it's going to show exactly how I go into the market every single day. It's going to probably be a longer video. I'm talking maybe over an hour, but it's needed. What it's going to show is this: barchart.com, right? Barchart.com, using this to aid us, the Forex Factory calendar, and then we're going to go into, your weekly profiling. The key is this: your weekly profile, knowing where that weekly candle's expansion is going to be favored. Now listen to this: perhaps on the weekend you don't know where that weekly expansion is going to be favored. That's totally fine. That doesn't mean you don't trade that week. I never said that. Perhaps from the Tuesday one side is looking to be clearly favored. That happens a lot, right?
Yeah,
Perhaps
yeah.
on the Tuesday, you'll see that Monday and Tuesday quickly trade down and reject. So you know that Wednesday probably offering a midweek reversal. You're waiting for this simply. You're waiting for the weekly and the daily to look very clear where it's pushing to on it, given on the given day, and you're trying to trade only in that direction. That is the highest probability trades you can have. If you cannot depict that direction, sit out. And I'll tell you why. If you don't consider bias and you trade the Judas swing, that move is very short-lived. It's not long and it's not, quick and fast. You want to trade the explosive expansion. That's what we want to trade. We want to trade the meat of the move. You want to get that large range. That's the most profitable move that will happen in the day. Now, if you cannot sieve out a bias, you're going to probably end up trading the Judas swing. The reason why it's called the Judas swing is because it catches out retail traders. And you know why it catches out the retail traders? And even SMC traders, the ones that are watered down. Why does that happen? Because they don't understand
Because I'm on
narrative.
the side.
They don't know where price is intended to go, or where price is more likely intended to go. So that Judas swing, that false move, it thinks that, oh yeah, it's going up. So what did the SMC traders do? Oh, it broke a high, so let me get a return to order block. And that return to order block, it doesn't work because that's a Judas swing. You're not trying to trade that leg higher. Do you see my point? This is where your narrative saves you as a trader. Now, in saying that, sometimes you're long on the day, right? Sometimes you're trying to get long on the day and you know it's long. You know exactly where the repricing is going to be. Like, for example, on the weekly on the US 10-year now, we have a clear fair value gap to work in, right? This candle's low, this candle's high, and this candle's low, right? Now, the repricing is likely to be this buy side liquidity pool, right? Working your way up these candles. It's kind of like a trend line here. I know where the repricing is likely to be. If that candle offers me a move into the fair value gap before going higher, is a different
AMD.
question. It's a different question if that happens, right? Let's say this was a 15-minute chart. I'd wait for retracement into this fair value gap, enter, stop loss down here, and I'd target this buy side liquidity pool. Very simple stuff. Now, sometimes it will just run to the buy side liquidity pool and it won't offer the trade I wanted to. And that's kind of frustrating. But the thing is, I still have grace in it because essentially your analysis was right. Do you see my point?
Yeah, yeah, yeah.
Let's look at, I know a lot of you like Bitcoin. Now you see these candles, yeah? This is just one big accumulation. Now you see this candle traded up higher and you see these candles, yeah? You see how it come to, you see this candle? You see how it's very close to this candle's bottom, this wick here. You see, we see imbalance here and people will tell you, yeah, that the imbalance is from this candle's low to this candle's high. That's what people will tell you, right?
Yeah.
But
know
don't consider it like that. And the reason is this. This is all a consolidation. Now, you know what consolidation is, right? It's just accumulating orders. Now, you see inside this range, right? From this high to this low, all this consolidation. There's all fair price ordered here. Do you see my point? All of here, even though there looks like there's fair value gaps and stuff, it's fair price offered. A lot of people waiting for this fair value gap close, you probably won't get it. Yeah, these three candles together, one consecutive bearish order block. It doesn't need to get there. The imbalance starts from here. You see this candle, this big displacement candle, you see as it trades lower and lower, once it exceeds where the range was, the consolidation here, that's where the imbalance begins. Because up until that point, it was just going back and forth. There was
Oh,
fair
it's about
price.
fair price.
There was fair price offered all in
Yo.
that consolidation.
It was
But
buying
once
and
you
selling
leave
off
it, exactly within that range, buying and selling was offered. Yeah, cool. Candle for candle, there's little gaps and stuff. But in that range of consolidation, there was, fair price offered. So you look at where did the range leave? Because now here, there was no orders going back and forth here. You see my point? To the left of here, there's nothing there. And this is only for consolidations. Don't think it's for things like this. This is different. This isn't consolidation, right? Like from here to here is a clear fair value gap. Come into it, move down lower. But this is different. You see how it's consolidation followed by an imbalance. When you have consolidation followed by a large displacement, look at where the consolidation was from and the imbalance is everything after, you know, you leave that consolidation, because then you're gone. Yeah, it closed it. There's no fair value gap left. This candle had a level of imbalance. This candle came and filled it. There's no fair value gap left. Now, in saying that, where do you think the next candle is likely to print down for Bitcoin?
Down.
Lower, because there's no fair value gap here. Yeah, there's this up candle. I mean, I would favor sell side being attacked first. Do you see my point? Oh yeah, in here, I'm looking to move into this candle. When it happens, I don't know. I think there'll be a catalyst, you know, some sort of actual like exchange malarkey that happens with Bitcoin or crypto in general, and it'll send
Yeah, they
send the
need a
market.
reason.
Yeah, they need a reason essentially. Any of you guys have a question?
Do you know when that move is gonna be to that imbalance?
I don't know when the move is going to be. I thought it's going to be early in the month, early in the year, sorry. So I thought it's going to be, I thought in November we'd get it with FOMC, but it didn't. So I'm just on my hands now. Instead of FOMC, we had what was it, FTX collapse. So that was kind of a scene.
You got,
That was peak.
I got a question. How do you trade market maker models intraday?
Okay, cool. Now this is going to be again the next lesson. You see how we said, yeah, every single candle is open. Every single candle has the same anatomy, yeah.
Right.
Every candle has a open, high, low, and close. Yeah.
Yeah.
On the days where you know where the daily candle is likely to print, and this is where high probability setups occur. If you can't do this, you don't have a high probability bread and butter day. For example, this day. Why is this day bread and butter? I'll tell you why. Consider the time and the price. The time, when we're looking at the weekly, I mean the daily, is the day of the week, right? We're considering the day of the week. Now, Wednesday trades up into a PD array, which is a high probability area for price to trade into, and it's Wednesday, which is midweek reversal territory.
Yeah.
You following me, yeah?
Yeah.
Now
Yeah.
the next day, it's likely to go down lower. That's the framework that we're going to use for shorts on Thursday. You see that simple framework. Wednesday traded up higher, swept Tuesday's previous day's highs into a premium array, moved down lower. The next candle on the daily, which is Thursday, I expect it to go lower, and it fits a midweek reversal profile. Easy, right?
Yeah.
Now, in saying that it's going to be a down day, you know where the manipulation should take place, and you know where the distribution should be. So let me take your attention to this here. I'm going to mimic this candle. Now, red candle means bearish, right? So you see from this on the daily, what time does this candle open?
12.
Midnight, right?
Yeah.
Now, from midnight to here, that's manipulation, right?
Yeah.
Do you all understand why that's manipulation, or you don't? Because if you don't, you're gonna be like, I don't get it.
Building the opposite side and
Because it's going to the opposite side of the day. That's manipulation, right? Now, from this time, from midnight to whatever, right? What's the time that we're expecting this to be put in?
well and
Like
Well,
we're
fast.
trying to say from Monday to like London open kills. That's what we prefer, right?
Yeah.
Now, this is a power of 3. Do you see how this is a power 3? Accumulation at midnight open. Why is it accumulation at midnight open? What's before midnight open?
Asian range.
Asia.
Asia's range is before midnight's open. So accumulation. Then from midnight to London, we have
Mhm.
manipulation,
Yeah.
distribution, right? That's what we have, right?
Yeah.
Cool. Now look at this candle and really stick with me, yeah? Let me get the path tool out.
What's that
What-
head and shoulders?
This is a market maker sell model,
Yeah.
right? This is a market maker sell model. And what's this?
Accumulation.
Consolidation.
Initial consolidation, buy
Buy
side of the
to the
curve,
curve, sell side
sell
to the
side of the curve. You see how this candle is this? It's this. They're the same thing. It's all a power of three. It's all a market maker model. Power of three, right? You see how it's the same thing, different format. Because what is this? How is this a power of three? Accumulation, buy side of the curve to the sell model is manipulation,
Yeah,
and then you have
makes sense.
distribution. Do you see my point? This is the crux of trading. This is how I'm trying to mold you guys into. This is how I want you guys to see it. Because from all my experience, I've tried it all. I've tried all the concepts. I've tried all the charted models, all of them, right? This is the one. This is the template that works the best. Well, for me. The COT data, I like to use it for like my weekly, not day to day. It's not even day to day because the COT data doesn't update every single day, by the way. I correlate manipulative
time.
moves and actual distributions with the COT data. So for example, let's say we're net long on the DXY and we're moving down. I can see that as like a manipulative move. Do you see my point? That's how I'd use the COT data. Yeah. So now let's put this into the context of intraday. Asia's range, midnight price here. This is London, and let's say London does the SMR as well, right? This is. Some people call it a QM. I call it a market structure shift. Whatever you guys want to call it, whatever it is, right? Now, that is the distribution, which is also the sell side of a market maker sell model, and that's what you want to do. This is what you want to capitalize on within the
The
day.
retracements of the sell side curve.
Yeah, you want it. That's what exactly. Now you see how I've done this on purpose because you have accumulation again, and then you have a power of three here. Do you see my point? You see
Yeah.
here we have return to breakout. Then here we have a this range to this range. You see how we have internal liquidity.
Is
Let's
that
say
a
there's
turtle soup?
this. Yeah, it's a turtle soup. Turtle soup. The highest. Let's say this is into. Let's say it's an institutional order flow integral. Yeah, into a fair value gap, move down lower, right? And you know that you're targeting this initial consolidation, at least. This is how you want to view the days because now you know where the day is likely to go. Now, why is it so important where the day is likely to go, right? Because you know the times of day where you're expecting each component of the candle to be put in. Open, we know Asian range and midnight price. Manipulation, midnight to London, you can expect this. And if you see this happening at the end of London or, from it can happen in London as well, or if you see this in New York, you know what you're in for and you can be prepared. Do you see how once you know what to expect, you're just waiting for the time of day to deliver your model?
Yeah.
That's it. It's so simple. But do you know what people can't do? They cannot. They're fidgety, and it's only taught by experience. I can tell you guys. I'm going to tell you guys again. You need to sit on your hands until it's clear. But some people do you know what they're going to do?
Trade the chop.
In here, they're gonna be like, cool, let me take a short here, innit? They take a short and it goes up. Then they think it's gonna get long. Let's say they get stopped out here. They think return to order block here. What happens? It's not a return to order block, is it? It's a market maker sell model. So you get stopped out again. And why is that? Because you didn't understand the day that you're in for. Secondly, you can't sit on your hands. Now, the sitting on your hands part, I can't teach you that. Experience has to teach you that. This expecting it, I've taught you guys this. I've taught you in many weekly commentaries that we've touched on it again. We've chapter 4, chapter 6 touches on it. Do you see my point? This is what you wait for. Know the likelihood of the candle. Where is the expansion of the candle likely to be? And you're only framing trades in that direction. You can use it for a 4 hour, right? You can use it for a 4 hour. I don't recommend you guys to start on that. You see that natural, like how do I say it? There's just a natural progression. I don't want you guys to start on the 4 hour. Once this gets easy and your read on price gets easy, naturally you know when it's right. I can't tell you. You know that maybe I can go on a 4 hour and do it. Don't try to do this on a 1 hour because there's too many 1 hour candles in a day. Within our trading day, there's only a few 4-hour candles, like 4 of them, right? 3 of them. On a 1 hour, there's 12 of them. So don't try to do it for the 1 hour candles. Do it minimum 4 hour. Open, high, low, close, and trade within it on a 5-minute time frame, for example.
Can you
Any
talk
question?
about
Yeah.
Can you talk about how to find the best New York continuations, bro?
Continuations.
Yeah.
Continuation, cool. ADR is definitely a component of it, yeah.
I'm asking for someone else who isn't in here because you've locked it in it. That's all.
Oh yeah, I forgot because some people ruined it, innit? Just trying to find it. I can't find it. For continuation trade in New York, yeah, you got to consider this. It's 2 aspects, yeah. Let's go back to the DXY daily.
The Euro USD on Friday had a nice continuation.
Let's go to the DXY. Let's go when we can expect reversal, because then the opposite is true for continuation, yeah. I'll give you an example. This is Monday, right? This is Monday. Now we can treat Monday to this, yeah, like a London to New York relationship. Do you see my point? Yeah. Monday trades higher. This day is likely to trade higher too. Why? Because it's from here we haven't reached a PD array. Do you see my point? And we have time left. Do you see my point? We know that this is probably going to be like a false move, yeah. But we know that Tuesday can probably be a continuation of Monday. Why? Because we have time of the week left before we can reverse, which is your ADR for intraday level. And we haven't hit a price array where we can be met with a resistance. Do you see my point? But Wednesday fits the criteria, right, for a reversal. Why? Because Wednesday, midweek reversal, there's probably a news event that happened on the 7th of December, I'm guessing. And it's inside of a PD array. So let's translate that to intraday level. Intraday level, yeah. Let's say you trade London and now you're going into New York session. Let's say this is like a 4-hour chart, yeah. Let's say that this is New York, and New York opens and hits that, and it does a market structure shift. Then you know it's a reversal profile, like a midday reversal. You see how this is midweek? You can get a midday reversal. Let's say you trade it down into a 4-hour PD array or a daily PD array. You can expect New York off that PD array to find resistance and essentially move off of it. To answer your question? It's in
Yeah.
chapter 3 as well.
bro.
The chapter 3 ADR and the New York session, I believe.
Yeah, thank you, bro.
Nah, that's all good.
I got one more question.
Yeah, what's it, bro?
When to expect London to NY OTE?
London to New York OTE.
Yeah, this Friday retracing
Okay,
premium in
so
London.
I'll give you an example here.
Okay.
London to New York OTE is an OTE that you should always hunt. It's a OTE that you should always hunt. Now, when London has made a clear high of the day, low of the day, for example, London to New York OTE is one of the things that I look for all the time. You see, when I know that this day is going to be down,
Yeah.
I know that it's likely that we're going to make the high of the day early on. So what I'm trying to do is I'm trying to get as close as possible to this high, because I know that this high, it shouldn't be exceeded. Do you see my point?
Yeah.
So every single time we make a low, I'm just waiting for that retracement, optimal trade entry of that high to get OTE in New York. Do you see my point?
Makes sense, yeah.
A lot of time, more than not, bro, it will come to equilibrium or it'll come to thingy, your
Just a-
OTE area.
Yeah.
If you want to take that trade, take it. Some people don't like it because the risk to reward on it is a bit low. That's fine. Perhaps you can find refinements on a lower time frame within the optimal trade entry area. Some people may find like a 1-minute market maker sell model, 3-minute market maker sell model happen off that OTE area.
Yeah,
But yeah, it's up to you really, innit?
100%, bro. Thanks for the help.
Nah,
But
that's
can you
right.
show an example?
Oh, here I don't know, because I don't want to flick through loads and You know what was a London to New York OTE, bro? There was a video I uploaded, a trade
No,
breakdown
no, I
video.
know. I just wanted to. Just
Look
double
at
check.
Euro USD on Friday. On like the 15-minute.
You didn't even drink the tea.
You're talking about this one.
Yeah.
So this is the London session, yeah? Now, what you expected for London, accumulation, that's manipulation and distribution. You see how it's a market maker model. You see that, remember when we went back and I drew that candle and I drew the market maker model next to it. Accumulation, smart money reversal, buy side of the curve. Do you see my point? And then you're just using the time of day to get into it. From London,
So is that the market maker model flipped?
this is market maker. No, it's the market maker buy model. This is a market maker
model,
buy
yeah.
model. The other one was a market maker sell model. So let's see this. Yeah, you can expect this, especially when you see it's a clear reversal in London. This is like an easy daily profile, for example, right? High, low, higher, high. You have a bullish breaker. Yeah, bullish breaker means reversal. It's also an entry model, but more importantly than that, it's a reversal profile, right? So you know that this low shouldn't break. Now, in saying that, every single time from this low, right, from that high, from here, you're trying to get optimal trade entry. Optimal trade entry was offered here straight away within the London session, right? You could have taken that trade and you could have targeted like these highs or even this high for it. Now, in saying that again, let's say New York starts. You see how I'm not changing the low, right? I'm not changing the low of it because this low can get run, but this low is the lowest in the session and the day. Do you see my point? So we're not expecting that. That's our suspect to low of the day. We're trying to get as close as possible to it because if we can put a stop loss there, if it's right, we should never get stopped out. If you get the trade in London, don't take another shot in New York. Any other questions?
Nah, bro. Love. I'm gonna get off, yo. Say.
Yeah, I think that's probably going to be. I don't want it to be too long because it's weekly commentary, and you know, I don't want it to be too long because it's longer for your guys' study. So we can end it there as well.
See you later, bro. Have a good day.
Yeah. Go on.
Appreciate it, bro.
Go on.
Appreciate that, bro. Happy New
whoever
Year,
re-
lot.
What a guy. Have a good one. Have a good one.
Gio, you recorded it, right?
There you go.